struggling with best method to cut an imbalanced position core if it starts to turn before reaching the target, sometimes resulting in break even stop out on the core. Always looks like it's just about to recover. I have tried using VWAP and delta strength to gauge when to cut, but it's a very subjective call. Well, it's a discretionary methodology, first and foremost. So there's going to be some subjectivity there, some discretion, depending on how you structure your process, to, how much is allowed. I think that adapting to conditions is important. I know when there was some decent volatility, mid to late last year, I had more success really not going for like major destinations in a way, at least with my intraday stuff, and really just kind of doing a little bit more something in between scalping and intraday position trading, where maybe you do get that first sign of divergence, and it's after it's made a quite a couple legs in your favor, and it's been a decent move, and you say, hey, that's good enough. Obviously, you could keep going from here. So I think there's certain conditions, is my point, where that's more appropriate if you really want to make adjustments like I do. Another big point to make is that, look, what's happened to you, that quote, they're struggling on, is something that, if you're going to be a trader who does sit through the divergences and does sit through some of this other stuff as it bounces, and you do get stopped out or break even or whatever after it's gone a good bit in your favor, that is one of the only ways to more consistently capture big winners, period. And it's just like, it comes with the territory, and it comes down to the way you want to structure your approach. You get to decide. So if it irks you just too much, balancing mental framework, natural human trader, all that good stuff, if it just eats you to no end to have that happen to you, then you're going to have to give up in a big way on the huge winners, and you're going to take more profits and not allow markets to reverse on you. Um, but there's no true free lunch in that regard. What I try to do, which isn't for everyone, but what I try to do is to adapt that kind of loose leash, short leash philosophy that I teach about in the course around trade management, based on the conditions, like I talked about, a very whippy, high volatile market. You might want to just take it move to move and take some pieces here and there, and you can be very, very profitable doing that. Whereas if you're holding the market's 35 handles in your favor, and then all of a sudden you're taking a 2-point stop after you know it reverses, there's conditions where that happens more frequently. There's contextual, forget volatility conditions. There's contextual environments where trailing a stop, is better. Giving it a ton of room is better. And, you know what those are that I teach. So, um, be aware of general volatility conditions, be aware of contextual conditions. I say pick an approach and then stand by it, and use your review work to assess whether, you know, it was the right call, without the benefit of hindsight, really, right? Doesn't matter if it worked or didn't. But if you find yourself doing one thing and the market does another, in terms of ideal trade management in hindsight, quite frequently, um, there may be something there. May not, may be bad luck, but there may be something there where you're missing something, whether it's super strong order flow signals, whether it's quite likely destinations, but for some reason you're picking monster targets that you really have no business shooting for intraday. Whatever the case may be, there could be room for improvement. But the main point that most people need to hear is that, you know, tough. This is how it is. If you're going for big targets and you give them room to do so, which is required to capture more of them, you're going to have more trades that come back and end up stopping you out. If you trail the stop tighter because you're tired of giving back gains, you're going to have more trades that end up taking you out before going to bigger targets. No free lunch. Find out what makes you happier. Find out what pisses you off less and structure your trading program around going for that and learn to live with those results. Learn to live with being okay with whatever the downside is of your approach because it's an approach you've chosen. Or if you're more discretionary, like I typically am, learn to live with making the wrong call. Double check your rationale, check the journal, check the notes, check why you chose what you chose, and continue to learn from that and refine. Doesn't mean that you're going to get closer and closer to just trade management perfection, because one of the first things I learned years ago was trade management perfection does not exist. And it's a fool's errand to chase that. Doesn't mean you can't get better at reading context, therefore, maybe having a more flexible bag of tricks you can pull out depending on the situation. But it can never be perfect.